Good morning. It's Thursday, November 20th, 10:53 a.m. A little busier this morning. I've had some meetings, uh, and I wanted to keep my streak going. This will be episode 5. Interesting day in the markets. The Qs are up over 2% when I just looked here. NVIDIA was up today too, although NVIDIA was up about 4% to $194, so it's still off from its recent high. And the Qs too. The Qs have been down. They're up now 2 days in a row, but they had been down 5 of the last 6 days. So interesting day. New background. I don't know what I'm going to do going forward, but this is, if I do it daily, you'll see where I'm at. This is one of my homes away from home, my place in the city, so to speak. I love this, this room here. I always work well here. My kids love it too. Love the just it's different. So I want to talk about a few things today that caught my eye. Natural gas is going to be a focus here in one of the next few episodes. I was going to do it today, just didn't get to it. Still kind of digging in. So I want to talk about price discovery, a comment I read from Carson of Muddy Waters, the Atlanta Fed GDP, and more NVIDIA. Should be a shorter episode, so it'll balance out yesterday's longer episode that we had. Housekeeping. I forgot to mention Taseko yesterday when I was listing things that really worked, and obviously I haven't mentioned everything that's worked this year, but Taseko was one that we had largely averaged in that family safe portfolio in 23 and 24. We've had some in-depth articles historically in the contrarian. It's up 135.8%, so almost 136% year to date. Teasers, that would be, natural gas is going to come up. Natural gas is, the equities have been pretty strong here, generally up. Most of them are working on their third up week in a row. And Antero's up 3.6% this week, for example, too. Tags, none. Feedback, we've talked about the background. We're going to work on that. I think I'm exploring different software. Some of the guys in the group, Shane Esbach sent me something. I'm going to do a podcast with Kai Chino Sachs, I believe Friday evening to run Saturday. So I might use Google Studio or Zoom for that. So it'll be a different view. Shout outs. I talked about barbers yesterday. Today I'm into organic, all natural stuff. I'm going to shout out David's toothpaste. I love this little metal roll that you can use. Big fan. So David's toothpaste, made in the USA, just high quality. The Carson block, this caught my eye here. I saw a quote from him yesterday, and he said that the block noted that the surge in passive trading had broken the markets in terms of greatly diminishing price discovery. Price discovery is one of my holy grails, keywords I kind of look for in the market. We've seen it at different times over the years. It comes and goes, and I think passive, the price insensitive valuation buying, or price insensitive valuation incentive buying from passive, it really, passive is going to buy no matter what, and that's what Block was saying. He said that in his quote, he said it doesn't matter, for example, how expensive NVIDIA gets. He said all of these funds, and the market is dominated by passive now, all of these funds that are buying the S&P 500 index, and then all the closet indexes too, they will not sell NVIDIA until they have net outflows. They will buy it every day at whatever the price is if they have inflows. And this is something that Professor Plum, Mike Green, has really focused on. We've had some commentary in our group where people said Mike Green has seemed kind of worn down or dejected. And, Mike Green has pointed out that the total assets in the Vanguard, total stock market index products have plateaued. And he thinks that's a precursor, to outflows from passive. And when that happens, the whole market structure will change. It has not happened yet. That when it does happen, and I always thought that you would have a big correction would spur that, but the corrections that we've had both with the pandemic in 2020 And then here in 2025 with the tariffs, they've both been very brief. And by brief, just weeks in terms of the correction, even though they were severe, and then they bounce right back. If we get a more sustained correction, like 2000, 2001, 2002, potentially from a bursting of the AI bubble, which I think is the biggest misallocation of capital in market history, that would be a sustained outflow. And the passive, inflow outflow balance is kind of on the precipice here. So it could turn over. So, but, you know, uh, basically, and Carson Block from Muddy Waters, I don't have my paper, I'm looking at my phone for my notes here. He's a noted short seller, but he says until that happens, it's incredibly difficult to short the market indices in some of these largest stocks because they just have that incessant passive bid, which makes a lot of sense. The next topic, the Atlanta Fed GDP, it moved up to 4.2% now for the third quarter. And that's a very high reading. It reinforces the industrial ramp up that we highlighted recently, and or I highlighted with the article I wrote November 12th on Seeking Alpha, and then on the TK Contrarian Substack subsequently, where that Dodge Momentum Index, um, it's up 60% year over year in September, and that's kind of it uh, anticipates the upturn in construction activity. And then TurboCat, before I got on this, I was looking at chat in the Contrarian, and TurboCat mentioned, that he had put together a retail index because of the pessimism around Target. And what he found there was that Target is more isolated, and there's actually some underlying strength in the retail activity, which bodes well for things, that are potentially undervalued there. So that's I'm going to focus on that maybe more in depth and go through that index. But I just saw that before I jumped on here. Um, so retail may be stronger. There's a building industrial ramp up, which makes sense because the AI bubble, well, it may be a bubble. They're investing in a lot of real assets that are, there's a construction boom that's coming, and then rates are coming down, which reliquefies things. So it's pretty interesting to watch. NVIDIA, I was inundated with emails, text from friends and colleagues and research colleagues, and everybody's talking about the accounting issues, and NVIDIA they've kind of beat on revenues by about $2 billion a quarter. I think they beat by $2.5 billion this quarter. So they beat again. They beat on earnings estimates. It's not cheap, obviously. I highlighted yesterday with 22 times sales, which is just extraordinary for one of the market's largest capitalization companies. And one of the things I was going to point out is that revenue is increasing, but there's a deceleration in the revenue growth, which makes sense because it's a law of large numbers. The base is so large, and growth is slowing. Meanwhile, the multiple is still very high. Now, I saw Beth Kindling came out and said that she had a $20 trillion market capitalization target for NVIDIA by 2030, and she's been, to her credit, she's been largely right about it so far. The ramp in NVIDIA. However, that's amazing. I mean, $20 trillion in market cap. And remember, NVIDIA is up, just for background, the stock market bottomed in October of 2022, and ChatGPT from OpenAI came out in November of 22. NVIDIA is up 1,400% plus from when ChatGPT came out, and NVIDIA famously came out in May of 2023 and said, hey, we're going to have this huge investment ramp. They were right. One problem, though, is that they're experiencing, and this is the cause of a lot of debate and a lot of research that people are digging into. On the accounting side, revenue is increasing, even though it's slowing, it's decelerating. But the problem is operating cash flow is going down. And there's a bullish take on that. There's a bearish take on that, but that's a source of big debate. Sanjay pointed this out to me this morning when we talked, and I didn't realize. I had to look it up to verify that was true. But NVIDIA replaced Enron in the S&P 500. I mean, reality sometimes is stranger than fiction. There's accounting questions about Nvidia now. I'm obviously the way they invest in companies, and then those companies buy Nvidia chips. But I couldn't believe that Nvidia was the company that replaced Enron, and that happened November 29th, 2001. So one other takeaway is that CoreWeave, which Nvidia supported the IPO. I looked this morning, uh, even before I was getting into my meetings today. But CoreWeave was 183 at the June high. This morning was up pretty good pre-market, $7 or $8, but it was $82 or so. I haven't looked at it since, but so it's way off from its June high, even though the market isn't really off from its June high. And then NBIS, another one of those data center type plays, is 135 at the October 13th high. It's 102. In earlier this morning. I haven't looked in the last hour or two, but there's some divergences there. So even Nvidia is off from its high, which was about, I think, 216. So nothing to, there's not a firm takeaway there, but I would keep your eye on those secondary companies like CoreWeave and MBS, so CRWV, and to see if they rebound. I mean, there's been a big sell-off in momentum growth stuff the last 3 or 4 weeks. We're getting a rebound today. Um, how far does that go? That's the question. So is it a persistent, pervasive rebound, or is it something that people who bought these higher use the rebound to get out and use it as a source of liquidity? So I think that's going to be an important takeaway going forward. I've got a board meeting at noon, so this is going to be a shorter episode today. I appreciate you guys tuning in. Most people are listening to the podcast. I just posted the YouTube link the other day, which is the video link. There's also videos on Substack, and now the podcast is on Spotify and Apple. Easy to listen to if you're in the car, or running or something like that, walking. And I don't know if I'm gonna keep doing it daily. So far, I've enjoyed that. This weekend, I want to write the E&P piece, my annual E&P piece, update that. I've spent some time the last couple of months in and out. I've got a block of time where I can really focus on that. So I want to update that. I want to do the podcast with Kai if he's available Friday evening. So I may do one Friday morning, then do the Friday evening podcast with Kai, and then publish that Saturday. That's kind of my thinking, and then do the E&P piece. I'm happy with the price action in natural gas. I want to really dive into that. There's a big debate. Goldman put their piece out, and I thought Gringo's been on Twitter. Gabrielle's been on Twitter. Had some excellent commentary. So I want to highlight that. And, basically Goldman has been pushing out their bearish thesis for various reasons. I don't think there's an LNG glut, and I'll get into why I believe that's the case. But that's, those have been some of our core positions all the way back to 2020. And when I did the DNP annual update in April of 2024, by the way, hardly anybody does that. It's a lot of data in there, and you have to go through the 10Ks, 10Qs, and pull that data. And I've done it since 2019, so it's fairly unique, in the data that's in there. But the TLDR, too long didn't read, takeaway from that is that in 2024, the E&Ps, the gas E&Ps, the high quality Marcellus ones, core Marcellus base, but also, EXE is in Marcellus and then the Haynesville. But those things are really cheap. So Antero, EQT, EXE, but the natural gas names in general are very cheap relative to the rest of the oil and gas complex. So it was really the case the last couple of years. 2024 with that E&P annual update highlighted that. They're still cheaper now, but I want to go in there. And again, a lot of the bigger, Exxon, Chevron, Occidental, Conoco, right down the list, Devon, they all have a lot of dry gas exposure, and dry gas prices are pretty strong. But that's coming. I hope you guys have a great Thursday. And here I'm in Carmel, in Indiana right now, north of Indianapolis, but it's dreary. It's cold. Winter's coming. I miss Florida, miss sunshine, but I'm enjoying life, and I appreciate I'm thankful and grateful for everybody in our group, everybody that listens to this research, and everybody that reads the research. Have a great Thursday. Bye.